welcome to the HODLcast. Today is September 7th, 2020. Happy Labor Day. I'm back after a little summer break from the podcast, and today we're going to talk about Florida's interpretation of Bitcoin as money. So, if you're a cryptocurrency company in America, chances are you have sought, or maybe you should seek guidance as to how the Florida money transmission license requirements apply to your company. Most companies look to avoid this license as it's costly, time consuming, and for many cryptocurrency companies, it's been considered as largely unnecessary. Yet, failure to apply for the license when it is required can prove to be a very costly mistake. You just have to look at the Espinoza case to see why. So, I guess we'll go over a brief timeline of the Florida money transmission regulations as applied to cryptocurrency, and then we'll go into a little more detail on each of them. So, the requirement for a money transmitter license was enacted in 2005. It had a stated goal of making Florida businesses more competitive. In 2014, we saw Michelle Espinoza, who was a local Bitcoin.com seller. He was charged with unlicensed money transmission and money laundering, and he argued that Bitcoin was not money on both counts, and he won. The state of Florida did choose to appeal, and in 2016, he won again, where the esteemed Judge Poehler had the famous quote, no one can understand what this is, but I'm not going to regulate it as money, basically. But the two-party, what was ultimately held there is that a two-party Bitcoin sale is not considered money transmission. And then after that case in 2017, Florida updated its money laundering language to include very explicit language adding Bitcoin and cryptocurrencies so that it was very clear if you're laundering money, it doesn't matter if it's Bitcoin or government issued or any other cryptocurrency. Then in 2018, Florida appointed a crypto czar. The Florida Blockchain Business Association was created, and a bill for a blockchain task force and Fintech Sandbox, came onto the docket. And also in 2018, the Office of Financial Regulation issued an opinion stating that a two-party Bitcoin sale, which they were actually looking at a Bitcoin ATM company, they said that that type of sale is not money transmission because there's no third-party transmission. Then in 2019, the Espinoza case was reopened, and the third District Court of Appeals in Florida held that two-party Bitcoin sale is actually money transmission. And then in 2020, the Financial Technologies Sandbox was created for money transmitters, payment instrument sellers, and lenders of consumer finance loans to try and streamline the application a little bit. So, I guess we'll start with federal registration as a money transmitter. So, cryptocurrency companies, they're often required to register at the federal level through FinCEN as a money service business. And usually this takes place under the category of money transmitter. And a subset of a money transmitter can be an exchanger. So FinCEN issued guidance on cryptocurrencies and said anyone they basically broke money transmitter into three categories for Bitcoin related use of it or application. But an administrator and an exchanger are required to register, and then a user is not required to register. So an exchanger is anyone that will take fiat in and give Bitcoin out. So, typically that's going to be anyone operating a Bitcoin ATM, any kind of cryptocurrency exchange, an over-the-counter trading desk, or even individuals in the business of selling Bitcoin in a peer-to-peer fashion. And the turning factor is usually whether the company exchanges one type of money for another, like a cryptocurrency to cryptocurrency or fiat to cryptocurrency. And there are some exemptions for banks. They're already regulated. Non-custodial wallets, they don't have to register with FinCEN because they're not actually taking custody and performing an exchange. And then persons registered with the SEC or CFTC, they're exempt from MSB registration because they're already registered with those other federal agencies, and there's a memorandum of understanding between them, so any information can be easily shared back and forth. Um, the tangible costs of federal registration include primarily the legal and compliance time to prepare the registration documents and the accompanied, compliance package. So there's no fee from FinCEN to register. It's just a matter of filling out this form and submitting it to them, letting them know that you're doing business and what state you're doing it in, what your bank account information is, your business address, things like that are required. And then the intangible costs include subjecting yourself to a Title 31 audit, or possibly subjecting yourself to that. It's an audit from the IRS. FinCEN is an arm of the IRS, and it can be pretty in depth, but but fairly uncommon. And then there's also the bigger challenge, or the more common challenge, or intangible cost of becoming a money service business is then you lose access to a regular business bank account, and you're required to get a money service business bank account, which banks consider this to be a really high risk industry. There's only a handful of banks that will offer banking services to MSBs. There's been Operation Choke Point, which I've written a blog about a few years ago now, in 2018, but it basically made it difficult for banks to get insurance when they have clients that are, in the sordid business of money services. And so a company typically has to pay $1 million to get a bank account, um, or have the $1 million sit in the account, or do 300,000 worth of transactions each month. So it's no easy task to get a money service business banking account. And then there's also a social cost to being in money service business, and that's that you have to have your users fill in their identity information. You have to know your customer if you're a money service business, which means performing an OFAC check on each person's name, and filing a SAR, suspicious activity report, with FinCEN if the customer does anything suspicious, and filing currency transaction reports if they're dealing in cash over $10,000 in 24 hours. Then there's the Florida money transmitter license, which is, what we're really honing in on today. And at that state level, there's approximately, across the whole country, there's about 10 states that require a money transmitter license for crypto companies who are doing two-party exchanges. That's, as I described, what you can really think of it as a Bitcoin ATM transaction, or an OTC, but taking money in, giving Bitcoin back, or taking one form of Bitcoin and giving another different currency back. So tether to Bitcoin would be considered one of those type of transactions, or any two-way exchange is what we're looking at. So of those 10 states that do require additional licensing to the federal license, most of them allow the company to apply on this streamlined website, the NMLS system, or nationwide multi-state licensing. But other states require, in a different application package be prepared, specifically dedicated to their state. And Florida is one of those states. So if a company does find out that they need the Florida license, the application has to be submitted directly to Florida. They have to pay the application fee to Florida, obtain a Florida surety bond, and that bond has to be in the amount of money that's going to be transmitted each year, which is also, at the time of the application, a very difficult number to ascertain. And the company must also submit their fingerprints, a criminal background, regulatory enforcement background check, and any litigation disclosures. And they also have to fill out an attestation form. Once they would receive the Florida license, a licensee must submit certain notices to the Florida Office of Financial Regulation, also known as the OFR. These reports include quarterly reports, audited annual financial statements, a securities device calculation form, and documentation to increase collateral device if applicable. So that's like if they've gone over their volume of expected transactions for the surety bond, then each year they must, increase the surety bond based on the size of the transactions. And then the licensee is also required to maintain a minimum net worth of 100,000, so that has to be shown on their audited financials. So you can see why a company would seek to avoid this fairly cumbersome process if it's not necessary for them. So, that the Florida money transmitter license was enacted in 2005, and it authorizes the holder to transmit currency, monetary value, or payment instruments either by wire, fax, electronic transfer, courier, the internet, or through bill pay services or other businesses that facilitate such transfer within this country or to or from locations outside of this country. So, when they said monetary value in that act, they mean a medium of exchange, whether or not redeemable in currency. And when they said a payment instrument, they mean a check, draft, warrant, money order, traveler's check, electronic instrument, or other instrument, payment of money or monetary value, whether or not negotiable. So it's pretty broad language. It's easy to see how Bitcoin could, meet that definition, but there's been a lot of argument back and forth of whether it should or not. So, the initial goal of this license was to create increased efficiency and clarify and increased efficiency and clarity, and also to reduce regulatory costs. Our current understanding, and the OFR, the Office of Financial Regulation, they are in charge of that license, and they have the final say on who it applies to. And the current regulatory understanding. So the OFR issued a declaratory statement in 2018 to a Bitcoin ATM provider, and they stated that the license is not required in order to operate a Bitcoin ATM in Florida. The OFR said Bitcoin ATMs facilitate transfers of cryptocurrencies for immediate cash with no third party involved. And so the direct quote from them is that because the petitioner, meaning the ATM company, because the petitioner's transactions occur directly between petitioner and customer with no third parties involved, and petitioner has complete control over the transactions, petitioner is never receiving currency, monetary value, or payment instruments for the purpose of transmitting the same. Consequently, petitioner is not acting as a money transmitter, and license for these activities is not required under Chapter 560 of Florida statutes. However, this conclusion, so that's a great conclusion for most Bitcoin companies that don't, as long as they're doing a two-way transaction, they don't need this license. But in January of 2019, the Espinoza case got reopened, and they found a different conclusion, and we'll get into that very shortly here. But I just wanted to touch on also, so the Florida Blockchain Business Association, it was established in 2018. So 2018 was a pretty good year for Florida, in terms of regulatory activity in this space. There was a crypto czar appointed, and they were tasked with enforcing regulations to protect investors. and also a Florida Blockchain Business Association was established, and they had the intention or the goal of passing the blockchain task force, or creating a blockchain task force, and in the legislative session of 2018, and they pushed for the Fintech Sandbox, another bill that we'll talk about later as well. But basically, the task force was supposed to investigate the benefits and costs of blockchain technology and come up with a report on it. But ultimately, they did create the task force, but as far as I know, there was never a report written. Then the Espinoza case. So, uh, this case has really been ongoing for a long time. It started in 2014. Espinoza was charged with unlicensed money transmission when he sold his own Bitcoin to an undercover officer. So he met with this undercover officer, I think 4 times in total, and he did 3 transactions, and they were all small, amounting to around $1,500 in total in value, until the 4th transaction, where the undercover officer attempted to uh, buy $30,000 worth of Bitcoin, and he brought cash, and Espinoza felt the money and realized it was fake and didn't go through with that transaction. But because of the $1,500 worth of transactions, the undercover officer made it very clear he wanted to stay anonymous. He made it very clear that the money was coming from, illegal sources. It was being used for credit card purchases on the dark web or something of that nature. So Espinoza gets arrested and charged with, unlicensed money transmission and money laundering. And his argument at the first trial court was that Bitcoin wasn't money for the purpose of both statutes, the money transmission statute and the money laundering statute. The state appealed the case, and then in the appeal court, which took place in 2016, Judge Poehler, she said that this court is unwilling to punish a man for selling his property to another. She explained, when his actions fall under a statute that's so vaguely written that even legal professionals have difficulty finding a singular meaning. So Espinoza is, done with his charges, it looks like, and Florida took a step to update the language of the money laundering statute. At that time, they added specific language that made it clear Bitcoin is money for the purpose of analyzing money laundering. They could have easily added Bitcoin to the money transmission statute at that time as well, but they chose not to. Then in 2019, Espinoza's criminal case was reopened, and the Third District Court of Appeals said that a person in the business of selling his own Bitcoin for cash is a money transmitter and a payment instrument seller under Florida law, and therefore required to be licensed as a money service business. And to reach this conclusion, they Florida Appellate Court distinguished the text of Florida's money service business statute from the federal statute, because the federal statute, it actually includes a third-party requirement. It says acceptance of currency, funds, or other value that substitutes currency from one person, and the transmission of currency, funds, or other value that substitutes for currency to another location or person by any means. It was 2019, and the Florida court could have looked at FinCEN's other guidance, which it doesn't actually require that third party requirement. But anyway, that's enough for a whole other blog or podcast on. But the Florida statute, it reads that it has to be for the purpose of transmitting the same by any means. And the appellate court interpreted that to mean that there's no third party transmission required. They said that, basically, Espinosa's act of exchanging, Bitcoin for fiat currency with the undercover officer, and he advertised himself as a business, that was enough to be considered a transmitter. And then so then the Fintech Sandbox came forward, or was enacted on July 1st, 2020, and the purpose is basically allows licensed people that should be licensed. So if you have an innovative financial product, they want to make it easier for you to offer it to consumers, but still, you still have to register. It's not quite as cumbersome of a registration. And the people that can apply to be in the sandbox are money transmitters, payment instrument sellers, and lenders of consumer finance loans. So pretty much, if Bitcoin companies start applying here, they might be, automatically saying that they're money transmitters in Florida, when the Office of Financial Regulation hasn't actually said that. But anyway, Florida has made, quite a few attempts to streamline or clarify this money transmission license as it applies to Bitcoin, but there's still a pretty big distinction between the Office of Financial Regulation's opinion on the subject and that of the appellate court. Um, and while the OFR does have the final jurisdiction over the license, they haven't issued any new declaratory statements since the 2019 Espinosa case. So it has left legal professionals a little bit up in the air as to, which direction to advise companies. And, if Florida were to actually enforce the Espinosa interpretation, Florida would become one of the few states that requires a company to have this separate and costly state license in addition to the FinCEN registration. Um, and maybe Florida could look at some of the other more progressive states in this matter, on this issue, like Wyoming, for instance. They've enacted 18 virtual currency and blockchain friendly regulations, including creating its own chancery court to hear cases on the matter. And the Chancery Court's primary purpose is to provide a forum for streamlined resolution for commercial business and trust cases. So if Florida had something like that, maybe we put Judge Polar on it, but basically you're going to get someone that's very familiar with the quite highly nuanced distinctions between each of the business models or flow of funds with Bitcoin. And Texas, they crafted a really strong distinction between virtual currency and sovereign currency in their finance code. The wording they used is, they said, because neither is centralized, virtual currencies nor cryptocurrencies are coin and paper money issued by the government of a country. They cannot be considered currencies under the statute. So, because they're not issued by the government, they're not considered currencies. It is very challenging when creating thoughtful regulation around this new technology. It's very important for the government to balance the benefits of fostering innovation against, the challenges of adequately protecting consumers. So, in my personal opinion, I think the OFR got it right on their ATM memo, where they said there's no license required for a two-party transaction. But I'd love to see Florida enact its own court of chancery so that we could have somewhere that's just dedicated to hearing matters related to cryptocurrency, and hopefully develop some clarity and maybe become a thought leader on the issue for other states to look to. Okay, thank you.